All right, recording is in session. Well, thanks for joining me here in the live midweek update. And for those of you watching the video, recorded video, thank you for watching that as well. We've had a lot of volatilities, in the market, but that's kind of what market does. And I'm actually kind of glad that this market, we see these volatilities, we see digestion, market taking its time. There are a lot of fear or uncertainty, and a lot of times market uses that as a catalyst to move higher. I mean, I don't know what else I can say, regarding of the market, because I've been talking about last several, many videos, even last week's video. You probably see my last week's video that I put up. And I try to find a certain topping pattern, possible major topping signal. Yes, this will be recorded for viewing later. Yeah, so if you haven't watched my last video, I try my best to find out if there's any kind of, technically, I'm not talking fundamentally, technically, if there's any kind of a topping signal. Yes, market is extended, but it's been extended for how many years now? So that's out of the question. Yes, the Fed is going to raise rates, or not going to raise rates. It's going to be June, it's going to be September, it's going to next. That's been around, since how many years now already? So that's out of the question. So let's talk price action, right? Let's remove all the emotions and feelings and all of that shenanigans, because they lie. Emotions lie, feelings lie, we as a human being, we lie, and analysis who comes on TV, they lie. They might have some hidden agenda, who knows, right? Even people like me, excuse me, even people like me can lie for my certain gain, right? You don't really know me. You know me through internet and in stock tools and Twitter and stuff like that. Do you truly know who I am? So you have to figure out for yourself. So how do you know? Who do we listen to, right? Do we listen to the news? Do we listen to Kay? Do we listen to somebody else on TV? Do we listen to some advisor, financial advisor? Who do we listen to? Price action. Because price action cannot lie. It is what it is. It's right there. It's tangible. And this is something I've been preaching, is that technical analysis is so valuable because we remove all of that lies. We lie, you lie, I lie, whole country lies, everyone lies. So that's what I was trying to achieve on my last video, is that, hey, is there any kind of concerning signal? Are there any kind of topping signal? And I couldn't find any. And yes, I saw certain monthly oscillators. They might be at overbought status. However, they can stay at overbought status for a really long time. We know that they can grind for years, especially on a monthly chart. We only have overbought status on a monthly chart. And that's it. That was the only thing I saw. Again, review that video. And Treasury bond rolling over. We're going to talk about that. So let me share my chart here real quick. So again, if you had any questions during the meeting, this session, feel free to use your left panel there and ask any questions. But it's just, I'll zoom in here. So this was a resistance. Technically, when we are looking at, short term, minor term, we were trying to forecast the minor term. For me, this is a minor term. Everybody has a different terminology for that. But for minor term, what you want to do is you want to see what is a recent resistance. Again, we're looking at daily chart here. This was the recent resistance, right? So we needed to get over that, right? And we did that. And this is where so many people come out and say all kinds of shenanigans, like bull trap, we're gonna hit the resistance, we're gonna fake people out, and it's gonna roll over. And that could happen. Anything is possible in the market, but let's talk probabilities here. So once we created this high, right? I believe that was when I write my first article on, raising bulls, declaring victory yet again. part 1. That was when I wrote that there. And you might be thinking, and then after rolling up, you might think, oh, probably K was wrong. It doesn't look like a breakout. Well, what I was looking at is this. Because we had this resistance here, we gotten above it. Now we have cultivated and established a minor term higher high. And that is a very significant when the trend is start to develop in a minor term, right? Because once we have a higher high, there is higher probability. Again, I cannot presume upon the market that I cannot say that, mark my word, this market is gonna just keep going higher. I cannot presume upon the market that way. I can't be arrogant enough to say that just trust me, mark my word, it's gonna go higher. I can't say that. And I can't presume upon the market and say market is gonna roll over without any kind of data. So what I said was, hey, now we have cleared this resistance here and we have cultivated higher low in the minor term. We have to give benefit of the doubt to the buyer. That's the thing about it is we have to respect the market. I cannot be arrogant and presume upon the market what the market is going to do, because this market knows how to humble you and slaughter you, right? So it pulled back. And so what was I looking at? So it pulled back. I'm looking for a higher low because it created higher high. So now I'm looking for a higher low. Sometimes it's a bit easier to look in a line chart, right? Okay, let me go to, that's a candle, that's a line chart. Okay, that was higher high, wasn't it? Okay. This is why you don't get obsessed with something getting slightly below the recent support. You don't get obsessed with that, especially when we're in an uptrend, especially when we're trading in a rising 50 MA. This is why you don't go selling frenzy when we get below 50 MA. You know what I mean? You heard this. I mean, many people know this. It's a rising 50 MA that is important. It's not that, it got slightly below that. That's not important. It was still rising, right? We got slightly below that. And this market loves to, play games. This market loves to play games. I do not like women who play games, right? But this market loves to play games, just loves to stir you up. And so you understand that factor. So how do we understand the minor term? So basically what I was saying is, as long as we stay in this vicinity, so you know that I use words like vicinity, in this level, right? It is considered as high low, right? So this is low, higher low, kind of a wider higher low, but that's indeed a higher low. Created at kind of a wider higher high. Guess what? This was a significant, very, very significant right there. That was very significant. Why? That is a higher low. Another higher low. Another higher low. And then what happened? Higher high. You'd be like, can it be that simple? I mean, is it all you're gonna do is count these lows and highs? Is that it? No, that's not it. There's more than that. But remember, I talked about on my first article is that's the dichotomy of trading. We must be sharp. We must be sophisticated. We must know what we're doing. But at the same time, we must be kind of plain stupid. Like just look at things pretty in a simple way. But there are different times for that. You gotta understand when to use what. And for those of skeptic eyes, because I don't blame you if you're a skeptic guy. I don't blame you at all. Because everybody come out and say, I told you so, I called you so, I nailed it, whatever. They always want to talk about it after the fact. So I have a proof. This is what we talked about here at the club. This was analysis back in April 15th. Hey, even if I was wrong, and let's say this thing gapped down and then continue lower, isn't that not a good analysis? We have higher lows and higher highs in the primary term, primary to intermediate term. 100 SMA has been acting as great support in the past. Should we give benefit of doubt here? You could say, well, you know, it has been acting as support a lot in the past. So, I mean, can it be again? I mean, if I go further in the chart, 100 SMA has been pretty major support all throughout. We had a little blip here, right? We had a blip. And then we got up, came back, and started respecting it. You don't see this often. Once certain support gets broken, it's exposed. The integrity of that support is questionable at best. And then when it comes back, and then it starts to respect that support again, then it means the trend continues. Actually, that portrays a stronger trend to come because this was a blip. And bears tried. And this is the one thing I talked about. It was, hey, the straight line, it doesn't scare me. What scares me is the major topping pattern. Can this market roll over with the straight line? Yes, it happened before, but it's very rare. You don't see that a lot. We probably didn't see it for the last, I don't know, you know, decades. Probably more than that if I go back. But without the major topping pattern and this kind of prolonged uptrend, we're not going to see this market just rolling over without the major topping pattern. There's always somewhere somebody shouting something for the last 2 years that this market is going to have a 15% correction or 20% correction. And again, there are noises, there are people saying all kinds of stuff. They have agendas. Everybody does. We all sell each other, right? When you go on a date, when you go meet up with your friends, we are always selling something. That's us. That's human being. Price action doesn't lie, right? Stick with the price action. And you get shenanigans, yes. You get shenanigans like this, and it stirs you up emotionally. But you say, hey, let's give benefit. This is a chart right here. This was the that chart that I just showed you. I have another chart to show you. For those skeptic eyes. Again, you have every right to be skeptic. I'm not making fun of you, nothing. You should be skeptic. Who knows what I'm doing, right? Who knows what my agenda is, right? Anyway, so this is what we talked. This was back in this was a May 5th, right there. May 5th, right? May 5th. After out, that's not year. That's 2015 right there. So May 5th there. So what we talked about is, you know, on my last live midweek update, I talked about how this right here, I mean, yeah, they don't look similar, but they have a similar sentiment to it. They're not exactly the same, but they have a similar sentiment where we got a bullish move and then we get a volatility, we come down a little bit, and then we try to get up, and then we get up, and then it's a hard climb. It's a difficult climb. It's weighted down. You know what I mean? There's some kind of force. So what we talked about is, hey, let's look at the Fibonacci, right? Fibonacci retracement zone. This is what I call FRZ. Right here, the yellow spot. What is FRZ? As long as we stay above that level, it is considered as a higher low in the minor term. And it's interesting, we got a little bit of doji there, some of the evening star candle. We have something similar there. So when we had a bearish day, this is a bearish day on May 5th, I was like, let's give benefit of doubt to the buyers because we are in the Fibonacci retracement zone. Again, I cannot presume upon the market and say, I cannot be arrogant and say, dude, it happened before, man. Just don't worry about it. It's gonna go. I can't say that. What I can say is, let's watch what happens. Let's watch what happens, right? And then that was right about here somewhere. I think it was right about somewhere, right? Another one. That was which one was it? Yeah, it was right here. This was this day, right there. So if I just put a Fibonacci right now, just to show you guys, it's like that. And this is a Fibonacci retracement zone. And just interesting to note that we came right down to the last level of Fibonacci, and this market loves to do that, just stir you up. This market loves to make you stay in the edge. And it's funny because I was talking about over the weekend on the members video, and I just actually, you guys watched last Samurai movie, you know, and I seen it back a long time ago, and I was bored over the weekend. I was watching it again, and I really liked it. And just the samurai, you know, they're such a lethal force because they're not afraid of dying. They're going to battlefield and they don't care about dying. And that's why they can be so successful. That's why they're such a lethal force, because they are not afraid. Their emotion is not going to dictate their reaction. And I realize as I start to trade this market more and more, you almost have to be like that. When you go to a market, we're going to battlefield. And you almost have to not care. I mean, yeah, I care. We study. And you know, our analysis, our judgment depended on it. You know what I mean? Our account is dependent on our judgment, our analysis. So it's not like you're neglectful. That's not what I'm saying. You're not neglectful, but at the same time, you don't care. You don't care if something were to go wrong, because all we have is the probabilities. And if this is there possibility this would have done that, yes. But almost like when this thing did this on this day, I was still saying, and it almost kind of looked like head and shoulders as well. You see that kind of like left shoulder, head, right shoulder, right? There are probably some people watching that, but it doesn't get confirmed until we break the neckline, which is that. And also necklines coinciding with that Fibonacci loss level. Remember, keep in mind, we also had almost looking like head and shoulder here, then never confirmed. So we're seeing a lot of these games happening and stirring you up, price action happening in the market, right? So that, you know, that emotionally though, that would stir a lot of people up when things like this happen, especially after making highs. And this is probably why a lot of people want to short here. But again, this is where you have to be plain stupid. Stop being emotional. Stop thinking too much. Stop overanalyzing. Just say, hey, we're still in the vicinity of a higher. This is higher high there. This is a low. We're still in the vicinity of a higher low, and we are in the Fibonacci retracement zone last level. We're still in that 50 MA area. We got slightly below it. Let's give benefit of the doubt to the buyers still, right? And then we did this, and then jobs report happened. And you could say, well, because of jobs report. I mean, seriously though, you can blame, I mean, all day long you can blame certain thing, you know what I mean? Certain thing is gonna happen. I've seen good news. You know, what was that? I mean, there's not many times we get a good news and we get a huge move, and then, like, you know, you'd act like that never happened before, you know? People always make excuses, and we could have a bad jobs report and have a gap up. We've seen all that weird shenanigan happening. But it came down anyway and filled that gap. Because why? This market is going to continue to play one last game. It's going to play one last game and stir people up. Right there. So this was a day. This was 12th, May 12th. What am I saying? So we have resistance here. So this, I think I taught you this technique like a few last slide midway update. If you want to understand the sentiment, if you're not understanding what's going on, go back in history and go back in the data and see. I mean, obviously this right here, does not look exactly same, but history does not repeat in exactly same way. They repeat in a similar way. What you want to look for is a sentiment, not just exact price similarity. What you want to see a sentiment. Sentiment was that we had a kind of consolidation, and then we trying to gap back up, and then it was having hard time getting up. So what happened was this was a bit of a consolidation, and then we trying to get up, and then started having hard time getting up. So does that sound like very similar to back in last year? Interesting to note, last April, May, and June, and April, May, also this year, right? So what am I saying? Hey, we're above 50 MA, let's give benefit of the doubt to the buyers. They were above 50 EMA. 50-day moving average. I use 50 EMA. Feds later. Yeah, I mean, I haven't looked at it. I can look at it later, Antonio. I see how Europeans doing. I don't know. Last time I checked was like a month ago. I believe they're doing. They had bottoming pattern of some sort. So we'll look at that. Right. So we looked at that, and then this was this day, and then we had a little bit of more of that, and then we had another gap up, and then we finally made new highs, and this is where, in the minor term, we are cultivating higher high and higher lows. Is it not? Right? Higher highs, higher lows. So what is it? We're talking more of minor term to intermediate. We're in an uptrend. Let's look more intermediate term. Higher lows, higher highs. And I don't know it's gonna do this and do that, or it could just have a huge move, but we're in an uptrend. Should we talk primary? This is a primary. Obviously we're in an uptrend. Do we have a topping pattern? Do we have anything like that? Do we have anything like this? A topping pattern? No, we don't. What's the topping pattern? You want to see at least some primary term lower high and equal lows. We don't have that. This chart I'm using is eSignal. Is the platform I use. So this is just a charting software. Yes, eSignal. Yep. I mean, you know, I've tried a lot of other ones, like their Trade Navigator. There's a Ninja Trader. There's all kinds, whole bunch. For what I do, I would have to say eSignal is awesome. I mean, it's worth every penny. Obviously, it's not free software, but to me, it's worth every penny. It has everything I need to do what I need to do. And again, if you go back to my last video that I did, trying to look for some topping patterns, stuff like that, and you know, there's a lot of capabilities. Again, I don't get paid from eSignal or nothing. I'm not trying to sell you, but there are a lot of capabilities you can use for technical traders. Ever compare TC2000? Somebody named the K-Kim's awesome on the I was like, why is my name there on the chat there? Anyway, as their name. Anyway, so TC2000 is the, what is it? The free charts. Dang it, freechart.com or something like that. That's TC2000. I use that. Only bad thing about TC2000 is that you can't go back like this in daily chart. It's a limited TC2000. You cannot go back into history like this looking at a daily chart. You have to look at a weekly or monthly to go back. Yeah, it's kind of dumb. So you really want to go back and, you know, look at that, and TC2000 don't allow you to do that. And mostly TC2000 is, I don't know, I mean, you can download it, but it's kind of web based. Oh yeah, for when I actually place my order in, like place my trades and stuff, yeah, I use Options House. And they're merged. Yeah, they merge with. Dang it, I forgot. Options Monsters. I think they merged with the Options Monsters. They're same company though. But yeah, so that's what I do. So that's S&P 500. Let's go to Russell here. I want to show you Russell. You know, Russell came down hard. You know what's really important when you're trading though, is that when something goes against you like this, these arrows are just letting you know when I enter long, and I'm still holding that, right? I enter calls, leaps, that expires in January 2016, and I started making gain, right? And then it pulled back. This is why most people don't want to trade, or want to do a long-term trade, because they're so focused on the initial gain. They're not looking at big picture. I'm looking for more, right? So when this happens, my gain is all gone in a matter of a week. That it took like months to gain, and a week and a half that is completely like gone, evaporated, right? So what do? This is what I do. This is what I do, right? What I do is, this is back in, we come down with a correction, and we start establishing some kind of uptrend, start cultivating uptrend here. So what we're looking at is, this is 100 SMA here, 100-day moving average. So I'm comparing historical data again. Okay? What I'm doing is, the market is going to go up, it's going to come down, it's going to go up, it's going to come down again, right? And I tend to do this when market pulls back. So not only I am comforting myself, I'm comforting others. I'm saying, hey, yes, it pulled back, but where are we? We're on a higher highs. And when it pulls back, it's interesting how, as our human being, that we always we fear the worst. I know I told you this story again. I told you this story before, but I'll tell it again in a short version. I had this rash last summer or last fall after, because on the whole summer I've been like tanning, like, actually going to we don't have beach here, we have a lake. So I go to the lake, tanning, playing basketball, the shirtless, and just doing that all summer. And it's fall time, I had this rash all over, like red everywhere. First thing comes into my mind, skin cancer? Is it a skin cancer? Oh my goodness. And that's human being. When something goes wrong, first thing you think is you're fearing the worst. And then I go to the doctor and say, this is nothing, it's gonna go away. We don't even know what happens, why you get these. They comes and goes. After a few months it'll go away. It went away like nothing. So this is what I'm saying. Oh my God, Kay. Oh my God. Is market rolling over? We're gonna have a crash? Are we gonna have a steep correction finally? Is this gonna be a major bull trap? Hey, I don't blame you if you think like that. I just wouldn't think that you'd be professional in trading if you're emotional like that, with all due respect, right? Because with that little pullback you're thinking like that, then you're not stable emotionally in trading in trading world, right? I can't presume upon the market and say, mark my word. I can't be arrogant and say, it's gonna go higher. You just trust in me. Trust in K. I can't say that. I do not know what's gonna happen. All I know is we're in an uptrend. We're higher lows, higher. This is a territory of higher low. We are right at that 100-day moving average. So I do not know what's gonna happen for sure, but I think that we have a high probability that it's gonna continue higher. I think that's the language that we should use, so we'll not be arrogant. Bottomed, and bottomed. Higher lows, and higher lows. Can it be that simple? Again, dichotomy of trading. Gotta be plain stupid at some point, but at some point you have to be very, very sharp and understand what you're doing. Right? So I can't say trading is simple and easy. If anybody tell you that, I think they're lying. I think they want to just sell something. I have to say trading is very difficult. It's a struggle. I think it's the biggest struggle mankind have to deal with next to wars. Because this is a war. We're in a battlefield. Because it means survival. This means survival. Though people who trade market, they have enough money. I mean, let's not get into that subject. Let's not get into that subject right now. But this is a war, right? You do it right, you win the war. You don't do it right, poverty, right? So we're talking about a brutal world here. Let's continue with the NASDAQ. You know, NASDAQ also clearing some resistance. You know what this market loves to do? I almost, you know, I thought that something like this was going to happen when this did this right here. I thought something like this was going to happen. We're going to pull back. Why? Because this market, this market just loves to play those stupid games. Like, you know, just because it's just so easy. Boom, 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 boom. But I'm thinking to myself, you know what? I know this market is gonna one more shenanigan, one more pullback. This market is never wanna make it easy. And then guess what? It pulls back. Just shake everybody up. Make sure those weekends, a short-term trader, swing trader, and day trader, just just completely be shaken. And then, you know, it gets. And again, I can't presume upon that it's we're gonna have this kind of run. I can't say that. What I can say is, let's look at the chart and see what it tells us. Is this not a higher high? Yes, it is. It is not a higher lows. Yes, it is. I'm not going to presume and say, hey, mark my word, we're going to have like, huge run. I'm going to say we have a higher probability that it's going to continue higher. We're above 10, 20, 50 MA. Benefit of the Dow goes to benefit of the Dow goes to the buyers in all terms, minor term, intermediate term, and primary term as of today, in all the indices actually. Financial sector as well. I put out that little yellow arrow there because I think I gave in my live midweek update back in March, I gave trade setup. Again, the trade setup I gave you was not a swing trade setup, was not a day trade setup. It was a position trading setup. I gave you stop below somewhere here. So if you faithfully waited out for a few months or so, I mean, it's not much, but at least you're plus right now, right? Slightly. And I'm still holding my financials as well, right? 100 SMA has been faithfully acting as support right there. This is where, a lot of people thought of head and shoulder pattern. That's good thinking, but never confirmed. Never confirmed. And when this thing gotten above this resistance right here, though we pull back, the nullification process, the repudiation process has started. What I mean by nullification process, the presence of this head and shoulder. Now the buyers are starting to nullify it, killing it. The bears have cultivated some kind of potential topping pattern, starting to nullify its presence, its strength. And then we pull back. This market loves to play games, and then it goes back up. And I cannot tell you that we're gonna have a huge move. What I can say is we did clear this low. We have not put in new high yet, but at least we are doing good in the intermediate term with an uptrend in the intermediate term. It could have up and down like this, but that's how the market is going. Right. Quickly, Dow Jones, same thing, we cleared that, looking bullish there. Transport, this is the thing about transport. There's somebody saying that because of transport, we're gonna have 15% correction in the U.S. equity market. And that's the thing about it is, well, back in Russell right here, and this was when Russell may hit a major topping pattern. This was last year, and this concerned me last year. This is why I did not trade equities all year last year. Mostly I trade treasury bond last year, if you guys remember, because of this major topping pattern we actually had, and we actually initially confirmed it as well. And even then, this market just continued higher. So what makes you think just because of treasury, transport, if this this price action is more of a downtrend channel consolidation-ish top pattern. It's not such a topping pattern, but again, can transport stand alone without the Dow Jones and the financial sector, the Nasdaq and the Russell and the S&P 500 condoning it? Can it pull all of the indices down? As far as the probability is concerned, we have how many we're looking at, and out of 6-7 indices we're looking at, only one of them that is a little bit struggling here. Can we say that because of this the whole market is going to roll over? We can't say that. Just like we couldn't say in the Russell times the whole market is going to roll, because at the time Spider and Nasdaq and the Nasdaq were not condoning Russell, and Dow Jones was not condoning Russell. That's why it was difficult to short the market, because of while the Russell's having the topping pattern, which then never played out, we didn't have any other indices having having same reaction. So it's kind of same thing goes there. So Spider, I forecast that again, I don't want to arrogantly say that just it's gonna get there, but I think there's a good chance we get to about 220, 225 at least. That's my target on the S&P 500. I can't say that it's gonna go straight up. We could have up and down movements, but I think if it's a good month, maybe rest of the summer, we might have a good run. We might have a run like this where we kind of have a straight run, and then we start to grind for a few months like this, like up and down, up and down, up and down, something like that. If I had to guess, obviously nobody truly knows, but I'm thinking 220, 225. I mean, if it's really laggy and it is, market really takes its time, it could take almost until end of the year to get here. Or if it's a fast move, maybe in a fall time, we could get there. So 220, 225 in this vicinity is what I am proposing, what I think will get there. It's interesting to note, however, that when I put out this Fibonacci right here, remember I talked about the sentiment thing, how this today's sentiment is similar to this sentiment right here. Whoa, where did it come from? There. Guess where it's topped out, really? I mean, this was here. Let me make it like this. I'll make it more visible for you guys. Make this red. There. And then make this red. There. So this is a 200% of Fibonacci retracement, and then we got a little bit higher, but you see that. So it was at 200. I think 250 got up to, actually. Let me put up 250. Actually, precisely 250. You see that? So if I put up 250 right here, again, I wouldn't look at this as like a kind of a fixated thing where you're gonna be blindly following this, but it's a guide. It's a guide. Fibonacci is a forecasting tool, so you can see, we got up, came down, hit the Fibonacci retracement. We came up to pretty precise to about 200%. We pulled back, and then it got up to 250% very precisely, and then sharply pull back. If it happens something similar to that, we might see to go up to about 200%, and we might not get a pullback. We might just do this and then get to about 250%. So this is why, this is one way of me thinking that we get to about 220, 250, right? And if you want to do some wave analysis as well to confirm that, you can do. This was a little bit difficult to do wave or the ABCD analysis, because I mean, yeah, it works, I guess. There you go. So I measured that move, I looked at that as high or low, and then I measured that move, and it confirms 250% right here. So we got A, B equals C and D. And again, I'm not saying that just because these things confirms like this, A, B, C, D confirms 250%, so it's like, oh my God, it's like, yeah, that's it. I'm like, I'm gonna blindly follow it. No, I mean, we still have to look at the market, make sure that the market is gonna do what it's gonna do. You could have a certain, it could change. Sentiment can change. next week or two, maybe even a month can change. But if everything goes according to the plan with today's analysis, this is a vicinity that I'm looking at here, similar to some of these levels where it topped out. So that's why S&P 500, 220, 250, and that's what we're looking at here. Any questions on the indices? No questions. Antonio asked, Euro stocks. Yes, I just remember. Euro stocks. I think because he's from Europe. So starting to look good. You can see that 100. First of all, these major moving averages, they haven't moved up. They haven't crossed. We haven't had a golden cross yet. We had a death cross right there, and then when we created that lower high, that was concerning, right? After feeling that getting the lower low, that was concerning there with that death cross. And then we got up, came down, and then what really did was we had a major kind of weekly bullish divergence. What we had was here. Let me bring this up. You can see we got slightly on MACD, but look at on stochastic. Pretty strong weekly bullish divergence here. Lower low, higher low, bullish divergence. Weekly bullish divergence is the strongest divergence you're gonna get. Even stronger than monthly. Monthly doesn't seem to always pan out. Daily is good for shorter term. Weekly can be analyzed as a major bottoming on topic. But obviously, again, it's not that simple where you're just gonna find these patterns and then you're just gonna go long blindly. There's also have to have a price action to confirm, substantiate these signals. This is why, you know what I mean, you can't just look at this and it's gonna continue higher. But with the price action happening as of late though, this is a daily chart right here. What we have right now, first of all, look at this way. This is high, we have higher high, and we have these lows. That's good, right? So in the minor term of things, intermediate to minor term of things, definitely we're making some progress here. We're definitely making some, uptrend, establishing and cultivating uptrend. The problem, concerning thing about that though is, if this thing, if this thing, let's say we get here and complete rollover, we do have to treat this as a potential major lower high. However, because it took so much time to get up here, I think the possibility of that happening is very low. Though it can happen, anything can happen, but the probability of that happening is low. But let's say if this thing kind of got up quickly and then rolled over, that is higher probability that this could be part of the major lower high. But because we took so much time to get here, it was September 2014, and so it took a while, so to get up here, less than a year, but it took a while. So because of that, there's a good chance might be we come down here, we do something like this, invert head and shoulder, head, left shoulder, head, and then we break out. That right there will be a that will be initial confirmation of major bottoming pattern. So we have certain signals, and it is starting to see some positive signs. We do not have a full signals yet though, but technically at least. And when we get that will be an initial confirmation. What I don't know after that will be, would it continue higher? Would it come back to retest and then bounce up? When it retests and then respect this level as a neckline or resistance becoming new support and then bounces, that where I would call it a full confirmation, that's a full that means Euro stocks are bottomed. Technically, we're bottomed. This thing gonna continue in an uptrend. That's what we're saying. So it still has some time, and then by that time, once this thing start doing this, we'll probably have this 100 and 200 and start crossing back up, right? And there's a different strategies if you want to use that. You can always, you know, this will be a little bit more safer to go long. You can anticipate that move and go up, but this will be a little bit riskier. This will be even safer after full confirmation, right? Risky, a little bit, you know, not as risky, very, very safe. There are different setup. There are different, you know, scenarios where you would deploy different strategies to enter in certain setups, right? So, well, obviously, I'm not gonna trade this, so I wouldn't know. I wouldn't know. But looking good. Looks like it's doing something there. Another thing, you know, I keep track is a lot of times this is weekly. I'm pretty sure that's SMA, 50-day moving average. Yeah, so 50-day moving average, that purple dotted line. So when we're trading below the purple dotted line right here, it's considered long-term bearish. And then, you know, when we start to get up above it, which we're starting to do right now, and if this thing starts to rise up, that's when you see that the market, it has reversed. So you look at all these things that sustain, you know, you look at the price, you can look at these, you look at that, look at the weekly divergence, and then you make your judgment call there. All right. All right, let's talk Treasury bond. You know, I'm glad the Treasury bond is rolling over. Maybe because I'm done with the trade too, but you know, when Treasury bond, let's see here. When Treasury bond rolls over, these are the signals there, the red. This is when Treasury bond rolled over. So when Treasury bond rolls over, equities tends to do well. So, and it was such a mystery to me that the whole time in 2014, equities and Treasury bond moved higher together. We haven't seen that, you know, since the crash. Anytime Treasury bond goes up, that was a topping pattern at least, or some kind of correction move. It didn't do that. It continued higher, and then finally Treasury bond rolling over. So when Treasury bond rolls over, it's always been a good sign for the equities. So that could be a good sign there. But with definite lower, this is the first time since late 2013 that Treasury bond has made lower high and lower low, and this is where you do not want to go long unless you're short term or something, and you can catch some of those moves, but could be a demise of Treasury bond here. All right. So let's. What time is it? Oh my God! So 47 minutes. So it took a while to look at all those there. Let's look at Tesla. You know what? I did tell you guys that I wouldn't think about going long until it gets above that. I still haven't, engaged in it. This is the thing about me is that when I feel fishy about something, I just don't want to go long. That's the reason why I didn't touch Netflix, because Netflix has some fishy looking chart, and you know, with a like kind of a, I mean, again, this may never confirm, you know, it's just, what concerning is that we do have equal lows there, and then if this thing rolls over, that could consider as a major lower high. And so I mean, there's other setups that I like. So we've actually gone long a lot on other setups, but Tesla though, I feel fishy about it. I really do. I just feel, you know, I don't know. So it would make me want to go long. I don't know if it's gonna go all the way up here, but if it does something like this, and then we create left shoulder, head, and a right shoulder, and this will be a safe entry somewhere here. You could always anticipate the run. It will be a little bit more risky at the time, and you have to really analyze well that bounce. Is it a rare bounce? Is it a legit bounce? Is it a fake bounce? All that stuff, right? So I personally probably wait till here because I feel fishy about this right here. That's what I feel fishy about. So I'm just gonna wait for that. Let's look at Apple. So Apple, this is where Fibonacci can be very, you know, helpful. We get a move, and then we come precisely to Fibonacci retracement zone. We get a move again. This time it doesn't come all the way down to the last level of Fibonacci retracement zone FRZ, but it respects the first level. And then, you know, and then we get a shenanigan, likes to play games. And I think because of the market, the whole market feeling fear, and then Apple investors feel fear as well. But if market continued higher, probably would continue higher as well. But what it did was, though, we got slightly below the 50 MA. You see that right there. You know, you don't call it trap for anything. You call that a bear trap because we're in an uptrend. When we're in an uptrend, there's more bear traps than bull trap, right? When we're in a downtrend, there will be more bull traps. That's what people have to understand. The traps, what it seems to be a bull trap in an uptrend, usually just the higher high and pulling back for higher low. But a bear trap, you know, is a trap because it's gonna, you know, you get a support line here, and then people going short right here, and then they just don't work out. That's a trap. I mean, you could look at this as, well, okay, that's a lower low in the minor term. You see, though, go to line chart, it's a more of an equal low. It wasn't truly a lower low, but even the slightly lower low, though, I would give some more time, because sometimes they give you slight lower low. This one right here, this is where I was looking at very closely. This is where I went long right here. This was back in early 2015, late 2014. We got slightly below this support here. I didn't close my positions out because I understood sometimes it does that. Market is still bullish. We're still in that vicinity of that 100 SMA, and then you see how it got up there. So that really wasn't truly a lower low, though. If you look at candles, though, it does look like a lower low, doesn't it? So kind of looking at both candles and line chart would definitely help there. So we got this kind of line going across. Looks more like a bull flag there. Looks like 10, 20, 50 MA. We're above that. Looking bullish to me. I think 150 on Apple. At least that's what I'm targeting. And this is where this analysis works great. When we measure this, where did it precisely here? Again, I don't. The line is, yeah. Look at this right here. You tell me, that's pretty precise. 161.8%. We topped out. Why do you think I closed out most of my positions? I went long here, I went long here, and then I closed most of my position. I journaled this. I documented this almost daily basis. You know, and because it got to my target, and it was a 61.8%. And then things got hectic onto earnings. Same thing happened last time with the earnings. Things got hectic before earnings. And then so this time around, if I do 61.8%, which is right here, so about 150 or so. You can probably do some, you know, ABCD to confirm that as well. So around this vicinity is my next target there as well on Apple. Did Car Icon say his target price is what, 230 or something? It's right here. So that's what he's saying. And again, that, you know, that could be 240. Yes. It could. Looking at a long-term picture, though, it looks like could be possible. I mean, look at this move right here. So I mean, looks like could be, and we could have this up and down movement, and then you get this euphoric like move, like that. So yeah, Apple looks bullish. Definitely looks bullish there. So stick with the trend, higher lows, higher highs, and intermediate minor term. What time is it? 4 o'clock. It's 4 o'clock here. Do you guys have any questions? I mean, I was gonna share some of our positions. My throat kind of hurts. I was gonna talk about some other stocks too, but AMBA, ITB, okay. Let's look at those. AMBA, yeah, so like these kind of stocks, it's like obviously, you know, you just higher lows, higher highs, we're on the uptrend. The question would be like, you know, how high can it go? Do a little bit of Fibonacci here, so you just do something like that. You see last time we started kind of slowing down around 200%, so we measured this move right here rather, and then we got to pretty precise to 200% right here, and then we start pulling back here. Let's measure this right here, see where it gone to. Interesting to note that I measured this move, it came to 200% as well, and we pulled back. Old resistance, new support, and got up again to 250. Interesting to see these Fibonacci's are very well respected. So if we do that, then if we just, it's a little bit, this isn't legit pullbacks. So this one's a bit, these are pullbacks. This is more look like a consolidation to me. So it's a bit difficult to use Fibonacci analysis on this one. That doesn't look like a pullback to me. That looks, this would have been a pullback, and then that would have been better. So it's a bit difficult to forecast, but we've had 1, 2, 3, 4, 5, 6 days of bullish run. We can probably grind. We're probably gonna grind higher like this, but sooner or later we're probably gonna pull back. So at this point, I wait for a pullback before going long. I really like to see this thing coming to 100 SMA before going long on there, but looks like it can continue to grind as long as it stays above this level right here, about 76, 66. We're considered as bullish. We could come back down to old resistance, new support, and then gap back up or something like that. But they don't always respect old resistance, not always. You can see this level respected it, but here it didn't. It pulled back a little bit more and then got up. But as long as it cultivates higher lows, higher highs, it looks bullish there. I am in from last week. That's a good move there. That's a good swing trade. So I mean, you know, if you're a swing trade or position trade, if you're swing trading, probably close some out up here. In the setup, this kind of thing, this isn't a good setup for position trade. Position trade setup would have been right here. The best position trade setup right here. Left shoulder head, right shoulder, bottoming pattern. That's a position trade setup, and then you hold for, you know, you hold for about 6 months, a year, and you kind of ride this. That will be position trade setup. If you got in last week, which means somewhere here. Wait, what's today's Wednesday, so maybe somewhere here. Then it's more of a swing trade. So it's more of a quicker time frame. Yeah, quicker time frame there. Do you have time to show us how do you do fib extensions? I believe I do share that information in my blog. I'll just go my blog here. Just go here. Technical analysis, Fibonacci tool. There's a little bit of a history on Fibonacci. This guy is some kind of mathematician. And then here's case Fibonacci's equivalent. This is Fibonacci retracement zone, FRZ. And here's expansions. I also use 250%. So I haven't updated it, but these are this is forecasting price action that is not there. This is FRZ, which means when it pulls back, retracement, these are numbers that I use. Right? So when you want to put in your Fibonacci, here I'll show you real quick. What you do is the higher high and then the low. This is how you want to do it, and it's all depending on your time frame too. So you want to quickly measure that high there, that low, and then you can quickly measure that 200% right there. and then this 250%, which is currently at, right? And these sequences, that's on my website. So you can just go ahead and copy that, and you can kind of explore with that. ITB. I'm actually going to put this in there, so then when I, what was it ticket symbol again? AMBA. So when I do a recording, I know what I covered, so I can make a note. Okay. Yeah, so ITB, this is good size pullback. The concern is this is definitely a lower low. So any of this move can be a lower high, and I'm not saying that's what's going to happen. It can be. I like to see a higher low, but this is a lower low. These things is fishy. This is one of those things that's fishy to me, right? Like, yeah, we're above 10, 20, 50, and man, you could say, hey, this is higher low in the primary. Yes, in the primary, definitely higher low. In the intermediate, though, that's a lower low. So let's say this thing comes all the way up here and hit this level and then roll over. That is considered lower high, lower low, and then, you know, you could do that. So this is one of those things, like, it's fishy, and so I don't want to. The bet again, you're looking at position trading setup. You know, I will be looking at this, and then this is where I'll go long in some of these vicinities. And if that's the case, I'll probably hold through. But as far as entry is concerned, I don't know if this is a good entry somewhere here. But once we cultivated that higher high, these are the levels for position trading. And then I don't know, depending on some of your levels, Fibonacci or something, you can close some out at some of these levels. That way you're not exposed to certain volatility or certain weak signals. This lower low is a concerning factor there, because you can see there higher lows faithfully, you know. And then once it started putting in lower lows here, things got hectic. You see that higher lows, it's an uptrend, and then lower lows, and then got hectic. So that's you're very welcome. Any other questions? You guys are all here. Wow. Well, I'll talk about two stocks, and we'll end the video. USO, okay, we'll look at USO, and then I'll talk about two stocks that I'm watching, and then I'll end the video, and that can possibly be, you know, good setup for you guys as well. Oh, the oil, yes, the oil, yes. Let's see. Yeah, you know, this isn't. I mean, if you want a bottom fish, you know, you can definitely go long here. You can look at this a double bottom. And this could be all resistance, new support. So when I look at right there, we're definitely kind of getting into a trend. We got a higher high, low, potential level of a higher low here. I can't say for sure that we're going to respect this level. We might come down a little bit lower, but all this vicinity is potential level of higher low. As long as this thing stays above 1555, it is all the potential of higher low, which means it could cut all the way down and then do this. That's still a higher low, because that low is higher than this low right here. But at this point, I'm not sure what it's going to do. We still have a 200 SMA declining. It's this is not my type of setup. I can say that this is a bottom. With this kind of a sideways move and then a tankage, I would like to see some solid consolidation for a while and then break out of it. That will be my setup, right? Like something like something like that, and then do this, and then do that, and then cultivate higher lows, higher highs. Some of these levels will be a better setup for me, at least. So looks in the intermediate to minor term, it looks bullish, but I don't know how long it's gonna last. It's still very heavily weighted. There's a lot of fear still, so there's some bullish divergence there on the daily chart. This is a daily chart, but there's some bullish divergence, so I don't know how long that can carry the weight, but there's a bit of good signal there. So no, you're very welcome. All right, so you know what? I'll cover Dunkin' Donuts and Bank of America, and then I will end this session. I just thought I'll give you something to maybe look around and stuff. Remember when I talked about the position trading setups? These are my type of setups. You get a good solid base that takes a long time to build. There's a lot of accumulation happening. There's three phases in the market, right? I'm sure there's different books you can read. There are three phases. There's a phase of accumulation phase, and then there's a public participation and the distribution, right? So it kind of goes back. There's on the stage analysis, stage 1, stage 2, stage 3, 4. There's different analysis, but it's all saying the same thing, really. So this was kind of more of an accumulation phase, and then I'm looking for that public participation phase. And when you're looking for position trading setups, what you want to look is that you want to make sure the setup can go for the next 6 months or a year, right? I mean, this move right here back in early 2013, 2012, that lasted about a year. So that's a great position trading setup right here. Even though you might have gone long right here, you might have closed your position right there. That's awesome. Trade setup there, and so that's kind of what I'm looking from Dunkin' Donuts. I think we might have, if the market continues to illuminate bullish environment, I think that would provide a good soil for Dunkin' Donuts to move, and we'll have a good move there. This is definitely a great accumulation phase, because it didn't roll over. It kind of stayed there for a while. We had a good earnings. And then it gapped up. I actually went long at open, and then we had another gap up, and the market tanked, and there's some volatility, came down, kind of formed that higher low, and then we're getting back up again. And so obviously it does look like we have higher high and then higher lows, obviously. So this could be looked at as high low, and people are always afraid of this double top there. Again, I wouldn't be surprised, I wouldn't worry about it until this thing starts to come down like this and break below it, so and sometimes with a double top initially confirming, this right here looked like a double top confirm right here. That looks more like a head and shoulders, actually. Go to line chart. Left shoulder, head, right shoulder, confirming, initial confirmation. So it's important that it has to have a full confirmation. What is a full confirmation? What it needed to do for a full confirmation, it needed to, sometimes they like to retest this neckline and go up to the retest neckline and then get rejected. That will be a full which is the safest time to short. This is initial confirmation. We saw that on the Russell, the big picture, where we had the initial confirmation, never fully confirmed, and then bang. So stop worrying too much about certain things that is not there. Work with the tangible data. We fear the worst. That's just our human DNA, that we fear the worst. And so when we get to double top, man, we're not even there yet. So I wouldn't even worry about it. Even if this thing gets below this level, I really wouldn't worry. I just, because we're still kind of in this kind of an uptrend going on here. So this could slightly get down. Worst case scenario, we get a kind of an M pattern, double top. But is that a major topping pattern? That's not a major topping pattern. That's more of a intermediate term topping pattern. So that if that confirms initially, that can make things hectic. But in due time, we can possibly get back up. So that's how you position trade, understanding the intermediate, minor, and primary term trend, and then knowing what action to take depending on the situations and scenario. So definitely, I really like the fact that we consolidate here. And then Dunkin' Donuts, I think we're going to, let me give you major, and this is right there. So you can see Fibonacci retracement zone 50%. Isn't that interesting? Every time we use Fibonacci retracement in the FRZ, works perfectly, right? and then we bounced off of that, consider as a primary term high or low, and then I'm targeting some of that level. We can also do some kind of in this vicinity, 65, 68 or so. Could take up to 6 months to a year though. But these are the setups that I like. These are the setups that I like. These, you know, and I'm looking for setups that can run. Obviously, you know, like, you know, Sherry, we just talked about AMBA. And you know, swing trading, that's a great swing trade right here. But obviously, this isn't a good position trade setup. The good position trade setup would have been right here. Left shoulder head, right shoulder, right here, and riding this. You see that? So there's a different setup. There are different strategies. Everybody has their own thing. I like to run this and look for these kind of setups. All right? So I think Dunkin' Donut, definitely keep an eye on it. Again, it's more of a long-term strategy there. Bank of America, I'll give you another one. What I like about Bank of America though is, you know, if we go to, let's look at a monthly chart here. No, I don't. I think I told you that last time. I don't use hard. You do use hard stop, but this is what I call two-part trigger system. That's what we use. Basically, what it is I have a mental stop, and then if that mental stop gets triggered, I analyze the situation once again, and then I decide if I want to wait a little bit or if I want to place a hard physical stop. So I always place a mental stop for, yeah. So mental stop first, and then I make sure hit. And because of that system that we have, we actually was able to salvage, you know, like Apple, you guys remember right here, you know, our stop was somewhere here. Actually below this one right here. We talked about it last time, below this low. And our mental stop was trigger. And then I want to look at it because we're still above 100 SMA, even though if this appear to be slightly lower low, I didn't get too caught up in just one day a move. You can see if I place a physical stop, I would have gotten stopped out. I didn't have that, but I said, hey, we got 100 SMA here, so I'm gonna just watch a couple more days and then start getting up, and I placed my physical stop right there, pull back, and then it got up. So I was able to, you know, salvage that. There's a few others like General Mills. I read an article about it recently. We've been long since right here. This, the funny thing is that as soon as right after I went long, market pulls back. This market loves to do that, right? You go long, that pulls back. Our stop on this was just below right here. Our mental stop was triggered, but because this definitely a lower low. That's definitely a lower low if you go to line chart. Dang it. There you go. General Mills, actually, I'll just put it up here. So, you know, I read an article about it. It looks good for the rest of the year. So if I go to line chart, dang it, where'd it go? There, here. That's definitely a lower low. But market loves to play games. It loves to play games. I hate playing games, right? Market does. And I knew it. And there's emotion concerning. When this thing do this, because you're losing, your fear, your emotion, remember what I said? I went long here. I went calls. So I'm losing pretty good size here. It was a leap. So I think at the time, probably about 20-30% or so. And you ask yourself, also, do you see my Fibonacci retracement zone? Aha. So now you see I'm kind of understanding the first certain level here. So you be like, emotion says, man, do I just cut things short so I don't lose anymore? Because I can't take losing anymore. So then that's emotion. But me, I talk with chart. I go, yes, that's a lower low. It's concerning factor, but we are in the vicinity of Fibonacci retracement zone. We are right on that 100. Interesting to note, last time we got slightly below 100 SMA, we shot up, and then we are slightly below 100 SMA, right? So we had we had a mental stop right here. If you had a physical stop, that would have gotten stopped us. That would have got stopped us out. A lot of times this market does it, stop you out and move without you. And next day, during the day, looked like it was on a tank. And then we had a little bit of wick. And I remember saying, I think it was a members video, I'm like, you know that wick right there, that helps me a little bit emotionally, that wick, because there's a little bit of wick there. Buyers are trying to buy this dip here, and then we had that, and then boom, like just did this. After all this shenanigan, grinding, like all that drama, just this is what this market loves to do. So this is why I don't use hard stop. I use mental stop, and then I analyze a situation, and then I come with direction or come with judgment if I'm gonna place physical stop. I never place a physical stop though, because once they start doing this right here, I think we did also have a 65 minutes of bullish divergence, which could become a catalyst at the time, and then yeah. So anyway. Bank of America, we end the video with this. We're not in this position right now, but what I was showing is this. Again, this is the last one. We'll end the video. What I liked about it is, first of all, you can see this right there. This is a 20 SMA in a monthly chart, right? And they are now moving up. When they move up, which means trend is possibly developing. If you look at historical data, when they move up, good things do happen for, you know, Bank of America. It got slightly below that. Things got a bit hectic, and then when we got back up here on a monthly chart, pretty good move there. When we got, you see that 20 month, pretty good move there. And then we starting to do that. And obviously when this thing moves like that, I don't really want to go long then. I want to see certain pullbacks. So we did that. It's more like a consolidation. And so we are right on that major resistance. Right. So it looks like if it breaks, I mean, just because it breaks like that, I don't know if it's going to do that, but. Oh, so, and then looking at the daily chart, we're right there. Right. So I haven't decided when I'm going to go long yet. Let's say if this thing gets above tomorrow, do I go long? I might. I don't know yet. Because the market is bullish, I might do it, but I'm not sure yet. I like to see a because what I'm really concerned about is that's a bit of a continuation. We might have this kind of run, and what I'm thinking, would that be any kind of pullback and fully confirming this and making sure of that. And plus I'm already holding many positions, so I'm not going to be hasty at all in this. But that's a very, very important support. January 17, I will look to January 17 calls. Very good, in the money, right? Whoa, that was good. Yes, somewhere there. 15, yes, that's what I will use. Portfolio management, why do I no normal small position? I mean, again, if we're holding many positions, it should be small sizes from this point on. And he's a member. He just asking questions of portfolio management. Yeah, so if it's because we've been holding many positions already. So from now on, anything new should be a smaller size. We gotta start scaling it down. We can't go crazy. Because we have other positions we're still holding, so I would recommend small sizes. Because we have so many of them now. But right now, yeah. So I'm looking at this, and I just haven't decided yet. I don't know. But I think if we can get some of these, because this looks like some potential double top that can be possibly starting to be nullified with this potential double bottom here, and then can possibly gap back up. When Bank of America go, they can go, you can see, and then kind of consolidation, and then we can possibly have that kind of move again. So this is kind of a good position trade setup for me, but the entry is hectic, right? Entry is a little bit hectic. So since I'm not going to be hasty at all on this one. I like to see like to see this thing going up and then pulling back and then go up. And then this is be a good entry there, safe entry. But problem is, will it pull back though? Will it pull back? That's the thing. Sometimes it won't. Sometimes we'll just go without you, and that's the case. We can't go long Bank of America. We gotta look for next pullback. It's depending on your portfolio as well. Let's say if I'm like I have a lot of cash right now, and I just don't have many positions, then I think I would say, hey, I would possibly just go long here. Maybe my physical plate or mental stuff somewhere down here. I mean, when you're position trading, you want to give a lot of leniency because we're going after a primary term trend. We're going to hold things 6 months a year, so you're giving a lot of leniency. You're not pulling tight stops. Those are swing traders, and I used to swing trade, and so I know what it's like. But you're giving a lot of leniency. But because I mean, let's say if this thing do this, let's say the reason behind it is, let's say if this thing goes up and then it comes down, what is it people want to say? Well, major, bull trend? No, higher high, and so there's what? Higher probably possibly making higher low. That's why you want to give that leniency, because there's a good probability it's going to pull back. And we talked about this on S&P 500, and then it creates a higher low, and then it breaks out. So I'd like to see, because of that. So if I had a cash position, I have a lot of cash position right now, then I would probably look to go long tomorrow or something. I would make sure though, I'll make sure that it's close above it, and then make sure it stays above it on the next day or so. But because of I'm holding many position right now, I'm not going to be hasty. I want this thing to have another pullback. That's probably what I'm going to do. I don't know. That's probably what I'm going to do. It's not too late, because if we're looking at, that's the one thing I love about position trading, is because you're not emotional like, oh my god, this is it's a chance right now, it had to go on right now. Like, you don't need to do that, because I'm looking for this kind of run. So I mean, is it really matter if you go long here, you go long there? I mean, you know what I mean? I mean, even if I close my positions up here, I don't even go all the way at 28. Let's say I close it at 20. Is that thing that no, that don't matter that much. But when you're short-term trading, that entry, that precise entry matters. So that's another thing why I love position trading. You don't have to be so emotional trying to get the best entry points or best entry price. You can miss a little bit. You can have a little bit more patience, or you don't have to be hasty. So that's why I like that. High of 2012 for back is dangerous. High of 2010. Nope. I don't think it will be, because it's interesting to note that it formed this kind of consolidation. So if this thing breaks out, probably gonna act as resistance. What I think, because this is more of a kind of a consolidation, accumulation, that it could have become some kind of topping pattern, though it could have, it didn't. So then when it doesn't become a topping, it becomes a continuation, more of accumulation, not a distribution. If this thing starts rolling over, then that's definitely stage 3, stage 4. But if this thing breaks out, then it's part of stage 1, 2, kind of consolidation stage, and then it breaks out. So it would have been a problem, let's say, if this thing right here formed up here. Like, let's say it did this. That would have been a problem. Then it would have been like, we have a major resistance, and right at that major resistance, we have a major topping pattern. If that would have been confirmed, that would have been a problem. But it's interesting to note that we did that kind of below it. And you kind of know why it did it below it, because that's why I look at a multi-time frame, because when we go to line chart, or when we go to line chart on the monthly, do you see it? That's the resistance. So when we break out of this on a monthly chart, we get a confirmation of new high. You see that? On a daily chart, no. On a monthly chart, yes. That's a new high. That's a break. In a daily chart, that wouldn't be new high. In a monthly chart, it would be, right? And obviously, it wouldn't confirm until month is over, though. So because of that, I think once this thing breaks out, We probably gonna see some resistance here for short term, but I don't think that's gonna become a major term. I think it might even do something like this. I don't think that's gonna become a major term. Dangerous resistance. NVAX. All right. We'll end video with that then. NVAX. Okay, let's see here. Interesting, I don't have more data. Okay, so I'm looking at 1-3 here. So yeah, I mean, even looking at like daily chart. I mean, this is a weekly chart here. That's what. It's hard to see, but that's a weekly chart. Why is it hard to see? So that's a weekly chart. Weekly chart looks like, yeah, that would be one of those things that I would like to look for position trading. This looks like great accumulation here before public participation, stage 2. So, and also we are cultivating higher lows and higher highs. I think the best time would have been though, okay, so we also made a higher high. So this is a pretty good looking chart here. So we got double, and then that's a big picture we just looked at. So if we go to zoom in, this is double bottom. We're confirming it. Initial confirmation. Go to line chart. Definitely we got higher high. This is not a bad trade setup right here in itself. I'll place stop somewhere here. Probably physical, mental stop here. But I'll give benefit of doubt to this support as well. Probably that 100. You want to see the 100 SMA supporting if it pulls back, create a higher low, and then get up. I do want to remind you though, when you're working with the gap, it always gets hectic. It always gets hectic. But it's difficult to know that if it's going to shoot through or it's going to just do this and roll. That's exactly what I did on General Mills, on our General Mills trade. There was gap, and I knew the gap was going to be hectic right here. But the setup was so good that I decided to go long anyway. You see that gap right here? When you're working with the gap, it always get a little bit hectic. I don't know what it is. It's just, sometimes they just shoot right through. It just, you never know, 50-50. It's hard to tell. So NVAX, yes, NVAX. With that gap, it's a bit hectic. But if you understand your levels, even if this thing pulls back, play mind games with you, then possibly it could still work out as a an uptrend though. But this thing definitely want to stay above this level. If this thing gets below that, thing's gonna get hectic, because then this gonna become as a lower high, at least in an intermediate term or so, right? But looking at this is, if we can stay up at 869 at least one more day or so, I think there's a good chance we'll get up here. But what I can't promise is the gap's gonna be hectic. The gap's gonna be hectic. So that's a lot of times it will fill it, it will pull back, shake everybody out, possibly hit the 100 SMA again, and then get up. So there maybe some mind game. It might play on some mind game there. Or though, when you're working with a major breakout session like this, sometimes what they do is they give you this breakout and then they go back inside one more time and then get up again. This will be a longer term mind game, because they will never, these charts will never make it easy, especially when these breakouts occur. That's why, you know, so many times eBay trying to break out and then pull back, break out, fall back. And for 2 years, eBay has been consolidating, and it had many attempts to break out. So they play a lot of games. Sometimes it goes straight up. Sometimes it plays games. So sometimes you just gotta go for it. Sometimes you just gotta go for it, you know, and stop somewhere there, right? I mean, if it all works out well, we could even do Fibonacci here and some target analysis. It's interesting to note again, Fibonacci retracement, respecting that again. So how every time, you know, we use that, they always come down to Fibonacci retracement, don't it? Sometimes it's 68%, or sometimes it's actually 38.2 retracement wise, 50, 61.8%, but it comes to that level and then bounce back up. And if that's the case, you know, we can probably put a target to about next run to about 13 there. You know, maybe we can do some of a target analysis. Perfect. See how it's perfectly confirming this level. So about 13.28. If everything goes well, if everything goes planned, that will be your next level of target, which you could close some 50% or something like that, and then wait for a pullback, add some more, which I like to do, actively position trading, and then we do that target analysis again. If everything goes well, I hope that it does, but sometimes when we're dealing with this major bottoming pattern, sometimes they play one last game and then go. That could still be considered as my primary term high or low. So sometimes you just gotta go for it. Well, that's it for me. Thank you for thank you very much for kind words, and thank you for following me. You're losing more weight, bro. Looking, that's funny because I think it could be a camera or my T-shirt. I don't I don't know, but I actually haven't been, I don't know. It's my aunt said that sometimes in the springtime, because I've been losing my appetite and I don't get hungry for some reason, and so I haven't been eating much. Maybe that's why. I don't really know. But I did lose 20 pounds from juicing. I know I told you guys about this from last year. So juicing is very a good thing there. A lot of kale and spinach, like hardcore. I juice where it's bitter. I got to a point where I don't even drink it for taste. It's bitter, and I drink it like that. And that's how, if you, any ladies want to lose weight, you juice, you exercise every day, and that's it. Anyway, have a great night, and we'll talk next time.
Your line is now muted.